So even if the form in your county has a slightly different name, the idea behind it is usually the same. Once you understand what to look for, you'll know exactly what to ask your local tax assessor's office. Let's get started with the first one. Number 1. The homestead exemption application. This is probably the most well-known property tax break, but a surprising number of seniors never actually file the paperwork for it. A homestead exemption is the taxable value of your primary residence. So if your home is valued at $200,000 and your county offers a $50,000 homestead exemption, you would only be taxed as if your home is worth $150,000. Here's the part most people miss. Many counties require you to apply for this exemption yourself. It's not automatic. If you bought your home years ago and never filled out the form, or if you moved and forgot to reapply at your new address, you could be paying full taxes on your home right now for no reason. Contact your county property appraiser's office and ask specifically about the homestead exemption application for your primary residence. Number 2. The senior citizen exemption form. This is separate from the general homestead exemption, and it's specifically designed for older homeowners. Many states offer an additional exemption once you reach a certain age, usually somewhere between 62 and 65, depending on where you live. This senior exemption often stacks on top of the homestead exemption, which means even more of your home's value becomes tax-free. Some counties also add an income requirement, so if your income falls below a certain threshold, you could qualify for an even larger reduction. The key thing to remember is that this is a completely different form from the standard homestead application, so even if you already filed for a homestead exemption years ago, you may still need to submit this separate senior form to get the extra benefit. Number 3. The property tax deferral application. This one surprises a lot of seniors because it works a little differently than a typical exemption. Instead of reducing the amount you owe, a tax deferral program allows you to postpone payment of your property taxes until the home is sold or transferred, often after you pass away. This can be incredibly helpful for seniors living on a fixed income who are struggling to keep up with rising property tax bills, but don't want to sell their home. The taxes don't disappear completely, but they don't have to be paid right now either. Interest usually applies, so it's important to understand the terms before applying. But for many seniors, this program provides real breathing room, the monthly budget. Number 4. The disability exemption form. If you're a senior living with a disability, this form could provide significant additional savings on top of any senior or homestead exemptions you already receive. Many states offer property tax reductions specifically for homeowners who are permanently and totally disabled, and in some cases, this exemption can eliminate property taxes almost entirely for qualifying homeowners. The requirements usually involve submitting proof of disability, often through a doctor's certification or documentation from the Social Security Administration if you're receiving disability benefits. If you or your spouse have a qualifying disability, it's worth asking your local assessor's office specifically about this exemption, because it's frequently overlooked by seniors who assume disability benefits and property tax exemptions are unrelated. Number 5. The Veterans Exemption Form. If you or your spouse served in the military, this one could be a significant one. Many states offer special property tax exemptions for veterans, and in some cases, veterans with a service-connected disability can qualify for a full exemption from property taxes altogether. Some states extend this benefit to surviving spouses of veterans as well, so even if your spouse has passed away, you may still be eligible to continue receiving this exemption. The eligibility requirements often depend on your discharge status and, if applicable, your disability rating from the Department of Veterans Affairs. Because this benefit can be so substantial, it's worth taking the time to gather your military service documentation and ask your county veteran service officer for help completing this form correctly. Number 6. The income-based circuit breaker application. This form goes by different names, depending on the state. Sometimes called a circuit breaker program, sometimes called a property tax relief credit. But the concept is the same everywhere it exists. This program is designed to prevent property taxes from taking a larger percentage of a senior's income. Here's how it typically works. If your property taxes exceed a certain percentage of your annual household income, the state provides a credit or refund to bring that burden back down to a manageable level. This is especially helpful for seniors whose home values have increased over the years due to rising real estate prices, while their income has stayed the same or even decreased after retirement. Even if your home is worth more on paper, this program recognizes that your actual ability to pay may not have grown at all. Number 7. The assessment freeze application. This last form is one of the most valuable, yet least understood. A property tax assessment freeze locks in the taxable value of your home in its current level, even if the market value continues to rise in the years ahead. Here's why this matters so much for seniors. In many parts of the country, home values have increased significantly, which means property taxes have increased right along with them, even if the homeowner never sold or made major renovations. If you qualify for an assessment freeze, your home's value for tax purposes stays the same year after year, protecting you from those rising costs. This is particularly important if you plan to stay in your home for a long time, since the savings compound with every year that home prices continue to rise around you. Now let's talk about how to actually get started. I know that's a lot of information, so let's simplify it. The first step is calling or visiting your local county property appraiser's office, sometimes called the assessor's office, depending on your state. Ask them directly what property tax exemptions and relief programs are available for senior homeowners in this county. Most offices are used to this question and can walk you through exactly which forms apply to your situation. The second step is gathering your documentation ahead of time. This usually includes proof of age, such as a driver's license or birth certificate, proof of income, such as your most recent tax return or Social Security benefit statement, and proof of residency, such as a utility bill or your deed. If you're applying for the disability or veterans exemption, you'll also want your disability documentation or military discharge papers, known as your DD-14, ready to go. The third step is paying close attention to deadlines. This is where a lot of seniors accidentally miss out on savings. Many of these exemptions have a specific application window, often earlier in the year, and if you miss the deadline, you may have to wait an entire year before you can apply again. Mark your calendar and don't wait until the last minute. Let's walk through a quick example to bring this all together. Imagine a 70-year-old widow living alone in a home valued at $180,000. She's on a fixed income from Social Security and a small pension. If she only has the basic homestead exemption filed, she might be paying property taxes on close to the full value of her home. But let's say she takes the time to apply for the senior citizen exemption, since she qualifies by age. Then she looks into the income-based relief program, since her fixed income falls below the threshold in her county. On top of that, she applies for the assessment freeze, locking in her home's value so future tax bills don't creep up as home prices rise around her. By stacking these programs together, instead of being taxed on nearly the full value of her home, she could end up being taxed on a much smaller portion of it, sometimes cutting her tax bill by half or more, depending on her state-specific programs. That's real money staying in her pocket every single year, money that can go toward medications, groceries, or simply peace of mind. A few important reminders before we wrap up. First, these programs are not automatic. In almost every case, you have to apply. The county doesn't reach out and offer these savings to you, so it's on you or a family member to take the initiative. Second, requirements vary by state and even by county, so the exact income limits, age requirements, and savings amounts will be different depending on where you live. Third, many of these exemptions can be combined, so don't assume that filing for one means you're done. Ask specifically whether you qualify for multiple same time. And finally, if you have adult children or family members helping you manage your finances, this is a great video to share with them. Many seniors don't realize these programs exist simply because no one ever told them. And that's exactly the kind of gap we're trying to close today. To summarize what we covered, the homestead exemption reduces your home's taxable value, and it's not automatic. You have to apply. The senior citizen exemption offers additional savings once you reach a certain age, often stacking on top of homestead benefits. The tax deferral program lets you postpone payment rather than pay immediately, easing pressure on a fixed income. The disability exemption can provide significant relief for qualifying homeowners with permanent disabilities. The veterans exemption rewards military service, sometimes eliminating property taxes entirely for qualifying veterans or their surviving spouses. The income-based circuit breaker program protects seniors whose property taxes have grown faster than their income. And the assessment freeze locks in your home's value, protecting you from future tax increases tied to rising home prices. Taking the time to look into these 7 forms could genuinely save you thousands of dollars every year. Money that stays in your home, your budget, and your peace of mind, instead of going toward taxes you may not actually owe. If you found this video helpful, please like, subscribe, and turn on notifications so you don't miss important Social Security updates. Thanks for watching, and I'll see you in the next video. Programs at the